there folks, so it's tea time once again, but this time it's not that kind of tea, it's AT&T tea time. So last week I went through the Q4 2020 results. This week I'm going to be going over what was said in the Analyst and Investor Presentation Day, which happened this week just gone. There's some big news on HBO Max, so I'll be going through that with you. We'll also be talking about the focus of the company, where they're heading with it, and of course we will discuss the debt briefly as well. If you're new to this channel, welcome. My name's Andy, and on this channel I like to talk about money and success. If you're interested in making, saving, and investing money, please be sure to hit that subscribe button down below, hit the notification bell, and then you get notified every time I release a new video. And if you enjoy this video and find it useful, please do remember to hit the thumbs up, because that helps YouTube algorithm, which in turn helps me, and I do appreciate it. So I'm not going to waffle on too much at all. I'm literally just going to slide straight into the slides. If you're interested in what they said in the 2020 Q4 results, check out my previous video. I'll put a link up there and in the description down below, so you can go through all of that there. I went through a lot of things in a lot of detail in that. So if you're interested in seeing that, maybe watch that video first and then come back to this one. But this is the forecast they've given and what they've said on their Investor and Analyst Presentation Day. So here we go. So I'm just going to take you through key slides from their presentation. This is the presentation here. So AT&T Analyst and Investor Day 2021. So they explain what their main focus is, which is obviously the 5G and fiber, the HBO Max and the Warner Media segment. Then in the middle there, you'll see it says, I shared 2021 priority, which is to grow customer relations, and their deliberate capital allocation, investing in strategic growth, which they see as 5G, fiber and HBO Max, which I agree with. I'm happy with that. They're committed to sustaining the dividend at current levels. Notice they say sustaining, not increasing. Utilizing cash after dividends to reduce debt. So they are focusing on reducing debt, and continued portfolio review, restructuring non-core asset. This slide really just shows the increase in broadband usage since 2015 and 2020, and as you can see, it's been growing sharply. This slide, really I'm interested in the right hand segment. You can see the increase in the expected increase in connected devices, and this actually makes perfect sense when you think about it. People don't normally think of AT&T as a growth company, but what I think they're trying to point out here is that this is a growth sector that they're in when it comes to 5G, fiber. The demands on a household, people will need faster and faster and better fiber to be able to support the number of devices that they're going to have streaming. If you remember, it wasn't that long ago that the only thing you had connected to the internet was your laptop or your PC, and nowadays you'll have multiple phones, multiple iPads, your TV, possibly your fridge, and more appliances are getting connected. Some people have the doorbells connected, and so on and so forth. Your home security system, everything with the Internet of Things. There are so many more things now becoming connected to the internet, and they need to have fast 5G in order to do that, which is what they, not 5G, sorry, fast fiber in order to do that, which is what they're showing there as a potential growth sector. And this is just basically pointing out that they're planning on increasing their fiber network. This slide just shows the spectrum for the 5G range, and as you know, if you saw my previous video, they actually came second in the bid into Verizon, so they have got a big chunk of the C-band. But if you look at this slide here, you can see that there are multiple different bands, and overall AT&T is the nation's largest network. And that's what is basically shown on this slide. This slide is really showing that 5G is a growth area. And whilst, of course, there was the dip from the impact of COVID, you can see the general trend is upwards there on the share of net add. This slide is really just showing that fiber is also a growth area, which is something else they obviously want to get across. So now on to Warner Media and HBO Max. If you've watched my videos before, you will know I'm a big fan of HBO Max. I think it's destined for great things. And let's have a look how it's going so far, because that is where the real news in this investor presentation day was. So 41 million domestic HBO Max and HBO subscribers in the US by the end of 2022. That was what they forecast back in October 2019 in that investor presentation day. And if you look at this, they actually achieved it by January 2021. So 2 years early, they hit the target with nearly 40 million, which is obviously phenomenally good news. As you can see here, they've had amazing growth in the past 7 months. So in the final 7 months of 2020, more were added than in the previous decade. And that's HBO Max and HBO subscribers. So it's gone from a decline, which was when it was just HBO, to now growing rapidly because really of HBO Max. This slide here shows the demographic difference between the linear HBO or HBO Linear and HBO Max. And you can see the percentage of under 35s is far greater with HBO Max. So it's taking on a much younger demographic, which is obviously fantastic news because that is the future, obviously. And you can also see, if you look at the right-hand graph there, that the average hours viewed per day is literally twice as much with HBO Max as compared to HBO Linear. So it's obviously a much more sticky product, which is, again, great news. This shows how it compares to its competitors. And as you can see, at $14.99, there's actually only one other package on there that is more expensive than that, and that is Netflix. And yet, despite that, we've still seen phenomenal growth with HBO Max. And they're obviously saying that's due to their best-in-class offering, which is reflected in its higher price. Because if you remember, Warner Media, they own a lot of premium content. Brief example of the premium content. And this is where the big news comes. So up next, an advertising-supported HBO Max. So great for consumers, an opportunity to get HBO Max for a lower price, great for marketeers, and a unusually effective advertising service of the highest quality. So I think this is completely genius. They're basically going to have a service which is streaming service at a lower rate for people, and it's going to be subsidized by advertising, a bit like YouTube is subsidized by adverts, which is obviously very, very clever indeed. And some of their competitors have already done that. They're now following suit and doing that as well, which is completely genius in my book. They're also going to be launching in 39 additional markets in late June, and they're also launching in a further 21 additional markets in the second half of this year. So they'll go from 1 market to 61 over the next 9 months, which is obviously phenomenal growth. Now, if you remember, in October 2019, the projection was for them to have 75 to 90 million HBO Max global subscribers by 2025. Now they are projecting that will be 120 million in 2025, with the potential beyond that of 30 million from new markets, which again, phenomenal growth. Now they expect that HBO Max will break even in 2025. And as you can see, they're expecting the 2025 revenue this is just for HBO Max, to be 15 billion, which is a phenomenal amount of revenue when you think this is just one segment of this massive company that is AT&T basically. This slide obviously has a very valid point. AT&T is a big advantage for HBO Max and will continue to be, because 25% of HBO Max subscribers subscribe via AT&T. So you take out an AT&T subscription, they can advertise to you directly, or they can bundle it in or do some kind of a deal, and that's one way they're getting people in there. And of course, HBO Max is also a big advantage for AT&T because it gives an incentive to choose AT&T's fibre over a competitor's fibre. If you're going to get a discount with HBO Max, or it's getting bundled in, it's added value. So it's another reason. So they are complementary, and that's what they're getting across here. So the key takeaways: 2 years ahead of schedule. Customers are 2 times engaged. This is all regarding HBO Max we're talking about. Advertising allows for a lower price, so we'll see that coming through, and we'll see what difference that makes. Growing to 61 markets this year. And it's a content powerhouse, which is absolutely true on all of those fronts. So the near-term business expectations, they're expecting there to be growth in mobility. They're expecting the broadband, strong fibre subscriber growth, higher speed adoption, and continued to invest in fibre. They're expecting declines in traditional products. They're actually expecting a little bit of growth in Latin America. They obviously expect very strong growth with HBO Max subscriber and revenue growth, and they're intending to increase investment in that. So how are they going to finance the C-band auction purchase? Well, as you can see, it was 27.4 billion they spent there, and you can see the estimated payments over the coming years: 2020, 2021, 2022, 2023, 2024, and the total amount is going to be about 27.4 billion. And that'll give a near nationwide footprint on the 80 megahertz band. So talking about their debt, you can see in June 2018, the debt was 177, and this is billion, which is obviously a phenomenal sum of money, which was 2.8 times debt to EBITDA ratio. By the year end 2020, they had that down to 2.7 times at 148 billion, still a phenomenal amount. As you can see, that will have increased by year end 2021 to 154 billion and will be 3 times, which is obviously not a particularly good thing, quite frankly. And that is a possible reason why the AT&T share price may stay depressed throughout 2021. Although there's a part of me that thinks when they expand into the new markets and HBO Max starts taking off in other countries, and it depends how well they do with that as well. For example, when they come over here to the UK, who are they going to get in bed with to do it? When they're in the USA, they've got their own services. We don't have AT&T broadband over here. That's not something we get. So they're going to have to do a deal with BT or one of our major subscribers. When they go to Germany, they'll have to do a deal with one of their major fibre or mobile phone subscribers if they're going to have that same effect. For example, here I have Netflix, and I got Netflix. I know how much it says they're paying over in the States. I'm sure you guys get deals in the States, but here I pay £2 per month for my Netflix subscription because it's literally a cheap bolt-on with a Black Friday deal I did when I took out Sky, which is basically a satellite service for TV channels we have over here. So it depends who they do deals with as to how quickly they'll be able to expand, and that'll be really, I think, pivotal in seeing how well they do, because the debt is increasing towards the end of the year, and that is not going to be seen as a good thing. And I think that might keep the share price down, which hopefully, I'm hoping it does, quite honestly, because I want to be able to pick up shares at the kind of prices I quoted in my previous video. I'll put a playlist up there of previous, I've made loads of videos on AT&T already. So my share price targets are staying the same. I'm not going to repeat them in this video. Watch a previous video for that information. But I'm hoping it will dip back down to those kind of levels so I can get in, because I do see from 2025 onwards, I actually think AT&T is going to start to increase, certainly when HBO Max becomes break even and starts turning that kind of revenue. If it hits them targets, I think things are frankly very rosy. Anyway, let's get back to these slides. So as you can see, their goal is to have lower leverage by 2024 at 2.5 times or lower, which actually isn't that low, which is why I'm saying I think from 2025 onwards is where we'll start to see real share appreciation. But if they start working in the right direction and it looks successful, we might start seeing that share appreciation a little bit quicker. This slide here, focus on value creation, revenue growth. Really, it's the right-hand column I'm particularly interested in. Stable dividend, reduced leverage, and upside potential in growth areas. And if you look at the left, it literally tells you where they're expecting the growth, and it's that broadband, the 5G and fibre, and HBO Max, which are the slides we went through earlier, and that's just reinforced here. You can see they're intending to invest in growth, 5G, fibre and HBO Max, and they've got deliberate capital allocation, a sustained dividend at the current level, and debt reduced. So they're aiming to reduce the debt, which is great. They're aiming to sustain the dividend. So if you're looking at this as hopefully going to keep growing it, maybe not. They're not claiming that they're going to be increasing the dividend. They're aiming to keep it the same. I'm still personally secretly hopeful that near the end of 2021 they'll sneak in a little increase, but they're not promising it. What they are saying is we're going to keep it at the same level as it is now. Now that will yet to be seen. They obviously can afford to keep it the same level, so I'm not expecting any drop in that level, and I do think this share is currently fairly good value, but personally I would like to see it a little bit cheaper, and I would like to see it at the values that I already spoke about in my previous video. That's where I'll be looking to buy. If you own the share already, my view is carry on holding it. I'm not a financial advisor, and this is not financial advice. I do hold the share. I am holding. I'm not currently buying at the current level as it stands right now. I like it to be a little bit lower. I've already gone through my prices, so I'm going to leave that said and done. Hope you found this useful. Thank you so much for watching, and bye-bye.